Well, good morning, Southern Oregon, and welcome back to the Real Estate Show. I'm Alice Lema. I'm your host of the Real Estate Show. I'm a broker here in beautiful Southern Oregon at John L. Scott Real Estate. And what a great weekend we have, don't we? The sun has been out. Yes, we know we're worried about water. Yep, fingers crossed there'll be more. But we've got Super Bowl, we've got Valentine's Day. We're freezing in the morning, scraping ice off our windshield, and we're turning on the air conditioner in the afternoon because it's so warm. So that kind of transition from winter to spring brings me right to a point I want to drill home about the housing market. We're in transition. And how do we know that? We know that by the number of price reductions, the number of back on market. Back on market, you'll see it on those websites, BOM. That means there was a deal and now there's not. So we're going to have some problems with our appraisals now. And again, that's all just the market trying to settle down out of the hyperextended, accelerated sellers market we had because of the shutdown and then because of the fires. And now we're trying to get our stable legs under us. And some of that is happening because we're actually getting more properties listed on the market. I know it doesn't feel like that to a lot of people, but we are. If you run the numbers, there's more properties available for sale right now than there was this time last year. It's not by very much, but it's going in the direction of leveling off and stabilizing. Once again, proving we're in transition. So thank you, sellers, for putting your homes on the market. Buyers, hang in there. But do get yourself reapproved frequently. Buyers with these interest rates changes, and that's slowing down the market too. And that was by design. That's what the feds wanted. But buyers, you got to stay on top of it because you might think you're going to wait for prices to go down. But when the interest rates go up, you might be on the wrong end of the stick of that monthly payment. So don't wait. Talk to your lenders, and sellers, keep putting your houses on the market. It's still a great time. There's still an awful lot of buyers out there. So speaking of awful lot of buyers, we've got Guy Giles, our in-house lender, Mutual Omaha Mortgage, on the show today. And he's bringing with him Brad Bennington, who is the executive officer of the Builders Association here in Southern Oregon. And what's going to be fun talking to them is what's going on with the spikes in the supply chain, the problems of not being able to get any materials, and also the labor shortage. And you know, it's going to be really interesting because Brad Bennington is super into data and numbers. He's going to talk a lot about what it costs to build and why you want to do it now. So do not touch that dial. We have a great show. We'll be right back. Well, good morning again, folks, and welcome back to the Real Estate Show. I'm Alice Lema with John L. Scott here in Southern Oregon. And today we're so excited to have our in-house lender, Guy Giles, Mutual of Omaha Mortgage, back. We're also going to be talking to Brad Bennington, who is the executive officer, the Builders Association of Southern Oregon. But before we launch into that, Guy Giles, tell us what's going on in the mortgage world.
Well, just kind of the same old thing. Another crazy week. We had some inflation numbers come out on Thursday, and no huge shock. We're the highest we've been since 1982, so about 7.5% on inflation numbers. So anyway, I was looking up some economists, and this one guy, Brandon from back east, anyway, kind of explains the whole thing. But hopefully we're getting a little bit towards the top of it, and we might see some easing in the weeks to come as far as the inflation goes. But
so is anybody saying that that's a possibility?
Well, that's what they're hoping, so I guess that'll remain to be seen. The Fed, is going to be a little bit, what they call hawkish about this. So I think we are going to see some interest rates rising a little bit, on your shorter term stuff. A lot of the mortgage side of it has been baked in. We anticipate these kinds of numbers and these things a little bit before they actually say them. So, unless we get some shock that we weren't expecting at all, which does happen from time to time, did with some jobs numbers the week before, a lot of what we deal with is again, kind of just baked in by the time this stuff happens. And I do want to be clear that the Fed raising rates does not directly impact mortgage rates. I mean, it's an overall sign of where we're heading. So they do generally walk, kind of hand in hand. But But the Fed, if he raises, she, whoever the case may be at the time, raises 0.5%, that's going to happen on your car loans. It's going to happen on your credit cards, things like that, your equity lines of credit. But it's not necessarily, they're not dictating directly what's going on with the mortgage-backed securities is what we trade on for our home loans. We had the Fed step in, quite a bit since the crash, and they've been buying up mortgage-backed securities. That's been helping keep the rates down a little bit. They've since backed off on a lot of that buying. So that kind of hurt us. It wasn't really as much as just kind of the numbers and the overall inflation right at the moment. But I don't see them going through the roof at all. And still historically, they're really good.
So I think that's something a lot of us keep forgetting is when we hear about the Federal Reserve Bank raising rates, we think it's immediately going to affect our mortgage. And what you're saying is it kind of gets absorbed a little bit ahead of time.
Yes. Yeah.
Okay.
We've already seen quite an increase, and it's today. I'll bet I've had. Well, actually, on Thursday, we're closed now. But I guess the last time I was really tracking it because I wasn't in the office on Friday. But I mean, we probably had 6 really wild swings as far as the mortgage-backed securities moving, 40 basis points to the positive, to the negative, and it all equates to about 26 basis points equates to about an 1/8 in your fee. So when you're talking points, you can just throw the word points out the window and percent. So if somebody's charging you for a particular mortgage rate, it's a percentage of the loan amount. So about 1/8%, it does add up if you're talking $400,000 or $500,000 purchase prices. And I mean, we've had probably, like on Thursday, 80 basis points altogether swings, positive, negative throughout the whole day. Dow Jones down about 530 points on that day. And it's been a little bit of a wild ride on our side. So trying to catch these things when they're a little bit of a dip is the best we can hope for.
Wow. So how much activity are you getting, Guy, from people who are in the process of trying to buy homes and they're really worried about these interest rate changes?
Well, I definitely get a lot of concern. I think thankfully people have been around for the most part long enough to know that historically they're still really good. And, I mean, it's hard to say that to somebody that was looking at a mid 2% rate 5 months ago, and now we're mid to high 3s, just depending on the circumstances. I mean, credit score obviously is part of it, down payment, the loan program that you're doing, but they're up a lot from then, but historically they're still down pretty good. So a lot of us have a memory long enough to where we're thinking actually they're still pretty darn good.
Yeah. And I thought it was interesting that you reminded us that the Federal Reserve started toying with the interest rates during the housing crash, which was 2007, 2009, depending on when you were personally impacted. So that's more than 20 years ago. There's a whole generation or generation and a half of buyers that don't remember what it used to be like before that.
It's crazy. I remember when I got into this business in 2005, and I was locking people in at 6.5%.
And we thought that was a good deal.
Well, yeah. It was, I was selling those things all day long. And it was I think the day before Thanksgiving when the Fed first started purchasing these mortgage-backed securities, and I was traveling to see my mom. I let my wife drive, and I just worked remotely in the car. And I think I locked 35 loans in that 5-hour period. It was insane. Wow. Just because they had dropped so much, nobody could even keep up. And wow. I spent the whole weekend inside of a Chase Bank back then. Yeah, I worked for the evil big banks for a little while, but just hoarding loans that whole Thanksgiving weekend.
Yeah.
So we've been a little spoiled.
So we're so excited to also have Brad Bennington today, who's the executive officer of the Builders Association of Southern Oregon. And I wonder if, Brad, you could weigh in a little bit about what this chaotic interest rate is doing with our local builders.
Right, Al. Yeah, Allison, Guy, thank you so much for inviting me on your show again today. Really perform a great service for the community, keeping people informed about what's going on. You know, thing a lot of people forget is what you do in your industry and what we do in the construction industry is important to all of our community, because everything that people expect for in polite society, such as libraries, police coverage, fire coverage, libraries, and the thing that's most important to most people's education, the majority of that is paid for by property tax revenues. And property tax revenues come from improved real estate. We're the people that build it, and you're the people that sell it. So if we don't experience health in our industry, in other words, you can't have a healthy community without a healthy construction economy and without a healthy real estate economy. You can't. So, Alice, getting back to your question as far as interest rates and what Guy was talking about, Guy and I are old enough. Alice, I don't know if you are, but Guy and I are old enough to remember back in 1976, we had a gentleman in the White House named Jimmy Carter.
Yeah.
And his administration from 1976 to 1980, we saw this monster rear its head that we know as inflation. And by the time that run was over, the state of Oregon had to repeal its usury laws because the banks were charging more than the loan sharks used to.
Wow.
So the state of Oregon had to repeal its usury laws, and where that comes into answering your question, Alice, is that inflation hits builders on the front line. In other words, all of the products that we have to put in, that we have to buy to put into what we build for the marketplace, we have to pay for all of those sometimes more than a year in advance of when we sell our product. So the availability and what we have to pay, the interest rate that we have to pay, all those things factor into the marketplace. And once again, it's our builders that really bear the brunt of the damage when you see the kind of instability and turbulence that Guy was just talking about and that you're referring to. So what I would say is to those nice people out there, your listeners that are out there listening to your show today, is whatever they think is expensive today, a year from now, they're going to be saying, God, I wish I would have bought it then. Because we are in a period of not just inflation, but if you look at the experts, they're saying that we are in the highest inflationary circumstances that we've seen in 40 years. And somebody that's as smart as Guy can explain what that means to everyone. But the reality is it really hits our builders hard right up front. And then eventually, when the public goes to buy the products that we build, then they experience that pain, because that pain all rolls downhill.
Yeah. And it's so hard to find the extra money. And I think people forget that these folks are part of our community, the contractors and the builders, and that there's, small business people, just like the baker or the restaurant owner, anybody like that. They're trying to run a business and take care of their family too.
Well, Guy, you're the money guy here. How many of your customers have you talked to that you're financing products for now that say, oh, I wish I would have bought it a year or two ago when, I thought things were expensive a year or two ago, but gosh, looking back, I wish I would have bought it then. How many folks do you talk to like that, Guy?
I think about them a lot. A lot of times you don't actually talk to them because at this point they're a little priced out of the market. But I've definitely had people over the last few years that just didn't get in the game, that were waiting for a deal, waiting for things to go down, waiting for I don't know what. And it turns out that it never really happened. I was having a conversation with an agent the other day about that guy that we had worked with together for a long time. And he'd be so priced out of the market at this point, don't even really want to look him up and ask him how things are going, because it's one of those things that I've done a lot of crazy, dumb things with money. There's no doubt about it, but I've never really lost on any real estate that I've had. As long as you're not trying to just turn it over in the first 6 months or 2 years, you're going to be fine on it. And it's definitely something that's happened over the last few years, but I haven't talked to a lot of them recently, but when I do, and they're coming back to do it, it's definitely a little bit of a sticker shock when it comes to, the difference in the prices of houses and the rates at this point.
Yeah, and it's been really hard on our locals. And, everybody would love a brand new home, and there's some absolutely beautiful ones going up in our valley. And the labor shortage and then the supply line problems. I just wonder how that's affecting the builders as well, Brad.
Well, Alice, the impacts are very significant, and you might have a little bit of a break coming up where we could expand on that a little bit more. But what I can say regarding your comment about availability of products and cost of products is you're absolutely correct. We have whole ranges of products that we simply can't get. I mean, it's not available for any price. And the products that we do have access to, the cost of those have gone up in some cases over 150%.
Wow.
And these are nothing that we can have any influence over. We just, it's you either pay the price to get it or you don't get the, if you want a door, here are the doors that we have, here are the windows that we have, here are the roofing that we have. If you want to buy it, fine. If you don't, somebody else will buy it. That's the kind of market we're in.
Yep, that's the experience. So we do have a quick break coming up. We're talking to Brad Bennington, the executive officer, the Builders Association of Southern Oregon, and Guy Giles, our in-house lender, Mutual Omaha Mortgage. We'll be right back. Do not touch that dial. Well, welcome back to the Real Estate Show, folks. Alice Lema, broker John L. Scott, your host for today, having a very informative and educational conversation with Guy Giles of Mutual Omaha Mortgage and Brad Bennington, the executive officer of the Builders Association here in Southern Oregon. And right before the break, Brad, we were just starting to touch on some of the supply chain side effects that you were talking about, some of the problems.
Right. Yeah. So, you've got cause and effect, both physical and financial at work here. I just tell you something, just one relatively small thing that had a big impact is we had a cold winter last year in Texas, and the largest resin plant in the United States that makes the resin material that bonds just a huge amount of the materials that we use in engineered lumber. The electricity that the plant used was not adequate to keep the plant warm enough because it came from wind turbines that weren't working. And so the whole plant literally froze. And when the plant froze, all the resin that was in process all became unusable. And then they literally had to take the whole plant apart and put it back together.
Oh no.
So it caused that one occurrence of that one occurrence where that one plant in Texas, this gigantic plant in Texas that created resin products to build engineered lumber for our industry, going down, wound up taking a gigantic amount of material off the market for use because they couldn't manufacture the resin, no manufactured product, and that really happened. So that was a physical thing that happened that was unhelpful. And then on the because of COVID management, what happened is factories were not able to keep their doors open because Congress would not give them liability from their workers getting COVID-related health problems. So, for instance, if one of their employees got sick, they could claim that the company was negligent, and the companies literally had no defense but to shut down, because Congress wouldn't give them immunity. So what happened is we had huge amounts of product pipeline literally just shut down. Plants that made windows, plants that made doors, plants that made appliances, plants that made cabinets, plants that made everything that we use in the product that we build for the public. So once all the products in those pipelines were used up, there wasn't anything coming back in or at a very, very low level, bringing us to where we are today, Alice. So we've got very, very constricted availability of building products in almost every segment. Like maybe you used to have 6 colors of roofing on your house. Now you got 2. You used to be able to choose from 5 or 6 different lines of windows. Now you got 1. And instead of getting your windows in 2 weeks, you're going to get them in 6 to 8 weeks, or maybe 12 weeks if you're not lucky. So all of these things are working together to create one of the most challenging situations builders have. One of our builders has a lot of projects going on down in the Phoenix Talon area. And he said, when we began these projects, we were using numbers that were current at the time, but we're actually losing money on a lot of these projects that we signed fixed bids for.
Oh, no.
Because the costs have escalated so much. Now, fortunately, by good management, they're going to be okay on some of these other areas because of some measures that they've taken. But one thing that I would really suggest to your listeners, both Alice, you and Guy, is if number one, if you find a housing product that works for you and make sure you can afford it, all I can tell you is going down the road, going down the timeline, things are only going to become more expensive, and it's going to be that way for a long, long time. So if you see a house that'll work for you, number one, don't expect it to go down. And number two, a year from now, expect it to cost significantly more. And the new subdivisions that are going to come online are going to cost significantly more as well, for reasons that we don't have time to go into this time. The other thing I would say is if you're in the process of building a home, make sure that you make an arrangement with your contractor on who is going to bear the increased cost of building materials when that happens. Not if it happens, but when it happens. It's called an adjustment clause. Make sure you decide on the front end how you're going to handle those costs. Don't wait till it happens. And the last thing that you want is don't think that you're just going to make your contractor bear the cost of these increases that he has nothing to do with, because the outgrowth of that, the net of that is going to be really unhelpful. I mean, if the contractor is really unlucky and gets pushed into bankruptcy, the last thing that you want to own is a home where that's happened. I tell you, I've seen those things take years to get resolved. So short answer is if you find a home that's going to work, make sure you can afford it. Their housing is just going to get more and more expensive the further it goes down the timeline.
So I'm wondering, because of your position with the Builders Association, do you ever get to network with other people that are in Builders Association management in other parts of the United States? I'm just wondering, is this kind of, I mean, I know the labor shortage and the supply chain problems are happening all over the United States, but Oregon has some special, situations because of its land use laws.
Yeah. Well, Alice, you're right. As you and Guy know, Oregon is the most land use restricted state in the entire United States. It's harder to build here than it is in Hawaii, believe it or not. So,
wow.
So there's that. So when it comes to buildable land, you got Oregon is a state that's just a little bit smaller than the entire nation of Germany, but it only has 4.2 million people in it. We've got one of the lowest population densities that there is, but buildable land, it almost takes an act of God to get any. 3 years ago, we completed a 19-year process to add 4,000 acres to the Medford urban growth boundary. Last year, we added, I think, 430 acres to the Central Point urban growth boundary, and that process took 30 years.
Wow.
So that's on the buildable land side. And also, we have unfortunately, in my opinion, we have a very progressive legislature, which every legislative session we go through, they add more regulatory mandates to the building industry, to the point that right now, as we're having this conversation, the cost of regulatory oversight on a new home in Southern Oregon is about 40%. So when you look at a $400,000 home, 40% of that, or $160,000, is simply regulatory oversight.
Oh my gosh, 160, comma.
On a $400,000 home, yeah, 40% of the cost of that home is the cost of regulatory oversight.
Wow, I don't think people realize that.
Yeah, and the contractors and builders don't have anything to do with that at all.
Right. They're lucky to even get something pushed through. So when these kind of situations are falling on the shoulders of our contractors and builders, we're watching these mid-project dramas kind of playing out. And I did not realize that if the contractor has to bear the brunt of the rising cost of the materials, but it makes sense. It could likely end up in a bankruptcy and the house isn't finished. Is that what you're saying?
Right. Yeah. If you're unlucky enough to get in one of those situations, not only is the house not finished, but you're going to have competing liens for who gets paid first and when.
Right.
It's going to wind up being litigated. And those litigations, in my experience, go on for years.
Yeah. Yeah. And what
So
was that document called? You said if you can work it out with your contractor ahead of time.
it's got a couple of different names, Alice and Guy, but we commonly call it an escalation clause. And what it is it's an agreement that if the cost of materials or products in a project go up, as a result, it has nothing to do. In other words, it's not the contractor adding more profit. It's just when he bid the job, OSB board was $10 a sheet, and during the course of the job, it goes up to $30 a sheet. Which, by the way, right now it's about $40 a sheet.
Oh my gosh.
Yeah, it just says that this is how we're going to deal with it, because the reality is this is happening. This isn't a theoretical thing. We saw the cost of housing materials go up $150,000 for the average 1,600 square foot house between April of 2020 and April of 2021.
Wow. So, Guy, how are the buyers handling these price spikes, I guess we'll call them, because none of us really saw this coming.
No, I mean, it's a lot of times with the builders that I work with, it's that they'll build the house and then we'll do the home loan after it's already built. So I do get calls from, from the builders or their real estate agents every now and then, and they're talking about, hey, we're going to have to raise this up $5,000, or, somebody found a fairy shrimp in one of the subdivisions, and, it's going to cost a little bit more, or it's going to be a big delay in getting the thing done. So that's really where I deal with it. And so it's just a mad rush to get maybe something signed, and they end up, holding pretty firm, to their prices on their end. But to what he is saying, if you're trying to get something permitted and it's taking a while and it goes up, and that's all going to factor into, that the house costs more, and then I'm charging a little bit more because of the rate. And then, heaven forbid, the tax assessor goes up 3% per year, and
Well, then
all
there's
this little
that.
stuff adds up. And so we're just handling it basically the best way we can. We're not getting creative with dumb loans, for lack of a better word. So that's nice. We haven't really loosened up our lending. And I mean, that might sound really good, to Frank Dodd before they fixed the legislation that they broke to begin with, So, I mean, it might sound good to them to have some crazy thing that'll get somebody in a house that really shouldn't be in a house. And I mean, can't really afford that. So we're not going down that slippery slope at all right now. We're still loaning good loans to people that can't afford it with stable jobs. So for the foreseeable future, I don't see a crash happen, and I don't see a big correction happening. It might slow down a little bit on the appreciation side, but again, we're just kind of dealing with it the best we can, just keeping people within their means. Part of that is, maybe right now, if you have consumer debt, cleaning that up. If you have an equity line of credit on your house or something, you might want to at least check into getting that fixed, because all these are going to be affected by this inflation and by the raising rate environment. So, carrying a lot of credit card debt right now is probably not the time to do that.
Yeah, it makes me worry that people may start using their credit cards more to offset their own, to kind of extend their own income. I think about how the price of gas in some areas is almost double what it was. And you think about the folks building the houses and making deliveries for what supplies are available, and what's happening to their bottom line. I think it's going to be a difficult situation for us as a community.
Yeah.
So,
Oh, I'm sorry. Go ahead, Brad.
Yeah, but Alice, you're exactly right, because we do in our industry, we do mostly site built construction. Which means when we build a home, everything that all the materials, they come to the job site, and every piece that gets there on the back of a truck.
Yeah, I had a
Which
tile
runs on
guy tell
gas.
me that he would charge us less if we went and got it. And it was quite a bit less. And it was because all his guys, all his people had to make those deliveries. You're exactly right. Well, we've got a quick break coming up, folks. We'll be right back with the Real Estate Show. Guy Giles, Mutual of Omaha Mortgage, and Brad Bennington. Whoops, and there's our chime. We'll be right back. Well, here we are again, folks, back at the Real Estate Show. We're talking to Brad Bennington, the Executive Officer of the Builders Association here in Southern Oregon, and also Guy Giles, our in-house lender, Mutual Omaha Mortgage. And as we were just getting into the last break, we were kind of talking about some of the price hikes and side effects of things happening with the supply chain with Brad, and how odd it is that some of these poor contractors are having to give their clients choices about who picks up the supplies.
Yeah, isn't that crazy?
Yeah,
Well,
but they are trying to work with their clients. That's what they're doing.
You bet. Well, we all understand that on September 8, 2020, as a result of arson caused fires, we lost 3,600 housing units in one day. And to put that in perspective, in 2019, running wide open with no COVID protocols that we had to observe, no material shortages, none of that, we built a little over 400 housing units in Jackson County. So just to kind of put that in perspective, right? So 400 houses a year running wide open compared to losing 3,600 housing units in a single day. Now, a lot of those housing units were mobile homes. That's a little bit different, but a housing unit is, if that's your home, whether it's a mobile home. So what I did want to say though is to folks that wonder if there's anyone trying to help out there is that's what the Builders Association Southern Oregon does. We are a self-funding, not-for-profit that provide education, advocacy, and policy support to the building industry to provide construction that is safe, sustainable, and the last thing, which is really important, affordable. And the affordable part is what we try to remind our legislators and regulators, because if we build these wonderful products that are just safe and comfortable and all these wonderful things, but nobody can afford to buy them, we're kind of missing the point. So I would just tell your listeners, this is what we do. We are your voice for reason and for affordability when it comes to these wonderful ideas that your legislators keep coming up with. Or I also mentioned that in the last legislative session, legislation was enacted that is going to add $20,000 to $50,000 to the cost of every new home built in the state of Oregon, 2022 and forward.
Oh, no.
So help us, help you. Contact us, help us give input to your legislators and our regulatory people, because they need to understand that all of their good ideas have to be paid for by somebody, and that somebody is your listeners.
Yeah, so 20 to 50,000 more dollars on new construction just from the last legislative session.
Yeah, not the short one we're in now, but the long session before that.
Right. So there could be more coming. Is you're scaring me, Brad?
Oh yeah. Oh yes.
Wow. So you want to give a phone number? Oh, go ahead, Guy.
Oh no, you can give the phone number. I was just doing a little math as far as just because I can't help myself. If you didn't build any new houses, which we knew there was kind of a shortage even before the arson burned down all these houses, you'd be looking at 9 years just to replace the houses at that level, at 400 houses a year, just to break even. So
that's right, Guy.
That's crazy.
And that would be without the COVID mandates and all that stuff.
Yeah, well, I think those are finally going to go away the closer we get to an election. It's just going to be like a weird miracle thing.
Well, Brad, if somebody wants to get more information regarding the Builders Association or get some help or have some ideas, how do they reach you?
Yeah, real easy. So probably the easiest way is our website at buildso.com, buildso.com. You can see about our home shows that are coming up: Josephine County Home Show in April, Southern Oregon Home Show in May. And then, of course, our office number here is 773-2872, 773-2872. But our website's got a lot of information on it. And again, we're the voice for affordable housing in Southern Oregon. We're the people that are raising our hands to our legislators and saying, please remember that people have to pay for all these wonderful ideas that you come up with.
Well, and I think it really makes a big impact on our local community too. I know we have an awful lot of folks coming from other places where $40,000 or $50,000 more doesn't impact them as much. But boy, our
Right.
locals, it's hard sometimes to be employed here.
Right.
Yeah.
Well, yeah, Alice, Guy and I have talked about this, and the reality is housing is not too expensive in Southern Oregon. Housing is too affordable in Southern Oregon, just not for the people that live here. The reason is that the price point of our housing is low compared to other markets, which is why we have people coming here from those markets and buying the housing out from underneath our local people that already
Right.
live here.
Right. Yep. That's exactly what happens. So, Brad Bennington, why don't you give your phone number one more time to the Builders
Yeah.
Association?
Yeah, 541-773-2872, buildso.com.
Yeah, and you've got some home shows coming up, I think, don't you? Or some kind of event?
We do. Josephine County, first weekend in April, Southern Oregon Home Show here in Jackson County, first weekend in May.
And you'll have a booth there at both of those?
Oh, we run, no, we'll have hundreds of booths at both of those, anything and everything from your home and property, all in one place. Come and talk to the experts, whatever you need, you'll find it there. Anything you need for your home and property at the home show.
Yeah, those are fun. A lot of us go to those and see all the new and latest stuff that's going on.
Yeah, I don't think Guy's wife will let him go anymore because every time he buys a bunch of stuff, and
Is that true, Guy? Are you banned from the home shows?
I think I'm about done building for a little while. I've done about everything you could possibly do to my house over the last couple of years. So I think I'll save a little money if I go out there. But yeah, I get in trouble.
Yeah. Do you are you going to be there and have a booth, Guy?
I've done it historically. I hadn't even thought that far yet, to be honest. I've just been keeping my head above water.
Well, with the mandates being lifted, then it'll be more more easily to arrange for all that.
Yeah, I'm really hoping there won't be a mask thing by then. I don't think I could sit there for 8 hours in a mask.
Yeah, well, and it also slows down the folks that normally would come.
But I have been there before. I've dealt with these guys, and especially with Brad. I don't overhear the builders and Brad and them talking about, well, if we could just get this done in Salem, we could make more money or buy a bigger pickup truck. It's always revolving around doing whatever they can do to make it more affordable, because it's just, it impacts all of us. And we all have kids that are getting to that home buying age, and we just do whatever we can to let them have the same shot that we had when we were buying our first house.
Yeah, and it'd be nice to keep those kids here in Southern Oregon. A lot of them I'm noticing are going to other parts of the country because the housing situation is just more affordable and less fuss.
Yeah, well, we'll keep fighting on our end. And thankfully, like I said, we got guys like Brad and you doing that.
Yeah, and again, I think people just don't realize, and what Brad was saying, $160,000 on a $400,000 new construction
is the cost of regulatory compliance.
And just an example of that is if you had 6 or 7 different, stoves that you were able to put in your house, and then they said, well, this one will save, 1 kilowatt in 10 years. You got to go with this one. And now you only have one to choose from, and it costs $400 more to, equip that kitchen. That all adds up.
Yeah. And if people just stop buying them, then what do we do?
Cook on a fire. That's probably we got plenty of them around here lately.
That's still free. Well, we're almost out of time, folks. Guy Giles, Mutual of Omaha Mortgage, our in-house lender. Brad Bennington, the executive officer, the Builders Association here in Southern Oregon. Always wonderful to have you guys on the show. Thank you so much.
Thanks, guys.
Thank you.